Good afternoon, traders. My name is still Isaac John, and today we'll be talking about supply and demand. Supply and demand is the same thing as support and resistance. So anyway, I say support and resistance, I equally means supply and demand. Both of them are the same thing. So what is support and resistance, or what is supply and demand? Supply and demand is a zone where the market buy aggressively or the market sold aggressively. Let's say the market is ranging here, then at a point it just went up aggressively. You see, this point is a demand zone. This point is a demand zone. It can also be called support zone or demand zone. So support zone is a zone at which price buys aggressively, or demand zone is a zone at which price buys aggressively. Then there is resistance zone or supply zone. Supply zone is a zone at which price sold aggressively. Resistance or supply zone at which price sold aggressively. Let's say market is ranging here, then at a point it drops aggressively. This is a resistance zone. Call it resistance zone or supply zone. So it's a point at which market drop aggressively. And how do you know if market has dropped aggressively? It is usually a three bullish or bearish big candle. For example, you see something like this. It's ranging here, then at a point you see three big candle drop like this. Three. The minimum of three. It can be four, it can be five, it can be 10, but the minimum of three candles. So sorry for that. The minimum of three candles. The same thing applies to the buy too. At a point you see a, a minimum of three bullish candle. This it actually means that the big boys or the banks or the people who controls the market has stepped into the market. Now let's go and see it on our chart, but very briefly let me just say supply and demand zone are zones at which price moves aggressively or drop aggressively. Those zones are demand and supply zone. Now, what happened in the forex market is price will come back to this zone and retest it just like this. Just like this. Let's just say price is doing this, then at a point, price is doing this, then at a point, it creates a demand. Then the demand came down. So this is the demand zone. Price will later come back. This is the demand zone. Price will later come back to this zone and go up again. So it can do this, it can retest this zone like 3 times, 4 times, even up to 7 times. It can always retest this zone. The same thing to the sell. then it creates an aggressive or an impulsive sell pattern. Then here is your zone, because this is where you started creating it from. So price will eventually in the future come back to retest this place and drop, probably get here. Remember, this is still the zone. This is the first test. It can then do this, come back here again, then drop again. So price will always come back to retest these zones. So let's go to our chart and see these zones with our two naked eyes. Okay. Oops. Let's see our chart with our two naked eyes. So I'll be using Euro USD for example. Open chart. This is Euro USD, but here I will permit me to use a landscape mode. Permit me to use a landscape mode. Now, what are we seeing here? I will use my, as I said before, I said anywhere where there is at least 3 bullish candle is a zone, supply or a demand zone. Now see here, see this candle here. You see 4 green candle, 1, 2, 3, and 4. This is where it started from, and this is the zone. So what happened here? Price went up, came back to retest this zone, went back up again, and you can see how it is retesting this zone. So I will still show us how to draw a supply and demand zones, how to map out the zones. Let's go and check. You can see that these three okay, see it here. You can see that this 1, 2, 3, 4, they are big candlesticks. They are big candlesticks. Now let me show you another zone. See this sell zone, this red one. 1, 2, 3, 4. Aggressive candlesticks. Okay. That is not all. You will see even more candlesticks as we proceed. I won't call this one a strong zone. It's a zone, but it's a weak zone because the green candles are small. So I'll call it a weak zone. See this one. 1, 2, 3, 4, 5. This is a zone. This is a zone. So this is a zone. I will come back to what kind of zone it is. This one too is a zone. This one too is a zone. 1, 2. That one too is a zone. Okay. There is a zone here too. This is a zone here. Sorry. Okay. This is a zone. There's a zone here. You can see the impulsive move to the upside. This is a zone too. You can see the impulsive move to the downside. Now let's see how to create these zones. How to map out these zones. I would start from so once you tap on your screen, just tap on it once, you will see, if you are using a phone, once you tap on your screen once, this is where you click. There is an icon here. If I tap on my screen once, you see it. Oops. Okay, let me just use my mouse. Now see it. Is somewhere around here. See it here. Just click on it. Click on it. Then choose rectangle. Choose rectangle. Now let's go and look for our zones. Remember, I have picked rectangle. I've picked rectangle. So I have picked a rectangle. Now let me look for those zones I talked about. Those zones I talked about. Okay, I'm seeing one zone here. Now you can see these three move. Where you start, what you map out is the previous opposite color. You can see this red here. This last red here is what we will map out. So I'll just bring this thing here. I'll use it to map out this red. I'll use it to cover this red. Now that is my zone. That is my zone. Sorry, I'm trying to extend it. I'm trying to extend it to the front. You can see how price is rejecting that place. You can see how price is rejecting that place. Oops, what is happening? Oh, okay. Okay, now you can see that this is a zone. You can see that this is a zone. Okay, this is the zone here. This is the zone here. Let me take my okay. You can see that this is a zone. Sorry, this is a zone here. Then price went up. You can see the abrupt movement to the upside. The momentum is crazy. Then when you see this fast movement to the upside, it should tell you that this is a zone. So what you map out is this red one before the beginning of the abrupt movement. Then what happened when it got to this place? It dropped and came back to this zone and went back up. This is actually a demand zone. Came back to this place and go back up. So if you want to enter a trade, you are supposed to look out for confluence here. This is where you are supposed to enter your trade. Then probably take your profits up here, somewhere up here or anywhere. But what happened here? When the price got to this place, it's gradually came down, then retest this zone again here, and boom, to the upside. When it got here, it drops. Still in this zone, before you start moving to the upside. I don't know if you are getting it. So you can see that this zone is actually a very strong zone. Okay, let's look out for another one. Let's look out for another one. This is actually a zone, but I won't trade it because the risk to reward is too much. This is a big one. This is a big candlestick. I can't risk it, or I wouldn't have risked it. Okay, I am seeing another one. See this one. See 1, 2, 3. Remember, I said minimum of 3. So let's go back and draw and take our pen. Sorry, our rectangle. No, 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 no. What did I do? What did I do? Okay, I have seen what I. So this is it. 1. This is it. 1, 2, 3. Let's see if price will retest it. So let's quickly go and pick up our rectangle, add an object, rectangle. I've picked the rectangle already, so I'll just drop it here. It should be on the green one, an opposite candlestick before the rapid drop. What happened here? What happened here? You can see that price all the way came, did this, came back to this zone, drop, still came back to retest this zone and drop. And what are we seeing here? You see that after all this candle, I won't do this, I won't take this, I won't take this one, because the red candlesticks are not up to 3. The red candlesticks are not up to 3. This one too is a good one because of this fast movement here, but I won't take this because I'm supposed to start from the last opposite, this red one, but this red one is as big as all this candle put together. So if I want to put my rectangle there, it will be a big rectangle, like this, and my take profits and stop loss, I'm supposed to enter here. My stop loss is supposed to be here. This is too big for me to use. It is too much for me to use. So I usually go for a risk, a trade that has a low risk. So let's look for more. Let's look for more confluences, zones. So I have seen another zone. Let me just bring this one here. I have seen another zone. This is the zone here. See these movements. These green movements. I want to leverage on these green movements. So where will I start from? If I ask you, where do you think we'll start from, or we'll map out our zone from? The last red one before the movement, which is here, this red one here. So instead of picking a new rectangle, let me just put this one there. Let me just put this one here. And oops, my screen. Okay, I think it took me back to the beginning. Of my. Okay, this is it. Is this it? Okay, now this is it. I want to, okay, you can see that. So you see, this is the what we are targeting, this red one here. That is the zone we are using. Now let's go to the future and see what is happening in the future. If we draw this, if we draw this, now you will still see that it is actually a zone. It is actually a zone, and at this point, you see its price went up, then came back to retest the zone, play around the zone, then drop below the zone, and boom, went up. So you can now see that sometimes there is these people they call market makers, the banks. These banks, they used to see where people's stop loss are. They know where your stop loss are. They know where your take profit is. So what they do is, of course, they study the charts too. They know that a lot of people, their stop loss is here, because your stop loss, sorry, your loss is somebody's profit. Your profit is somebody's loss. So they know that a lot of people will put their stop loss here, because if you want to enter this trade here, you put your stop loss here. So there is a lot of people that will be putting their stop loss here. So what they do is they play around, they put money to take people's stop loss, which is, they are taking people's stop loss, which is their profit for them. Then it goes up. It goes up. So let's look for more. Let's look for more. Let's look for more. Just one more. Okay, let's do, all these ones are demand zone. Let's look for supply zone. Let's look for supply zone. Let's look for a supply. Okay. Zone can actually be broken. Zones can be broken. I want to find a supply zone, a good supply zone I can use as an example for you. Okay, I have seen one supply zone, which is this one. See this fast move to the downside. This down move to the downside. So where is the zone? The last green one before the fast drop, which is this green candle here. This green candle here. So let's map it out, and I will use it to show you a break. Let's map it out. Now you can see that when this happens, there is a drop. We are expecting price to do this drop, come down to this zone, and drop again. That is what we are expecting. But market is not usually like that. At this time, market dropped, came back to break this. Now this is a resistance or a supply zone. You can call it either a resistance or a supply zone. This is a supply zone or a resistance zone. So what we are expecting is for price to drop, go like this and drop again. But no, price broke the structure. Price broke the structure, which is dropped, came back to break it. It shows that price is about to start going up. So this can actually be a fake breakout, just like what happened the other time. They took out all your stop losses. Now, in this case, in this case, in this case, see how price broke it, then came back to retest this zone. Sorry, price came here, came to break this zone, then come back to touch this zone and went up, because I can see the touch here. There's a touch here. So it broke it, came back to touch this zone, then start going up. Then if you see again, it came back here to touch this zone and start going up. So zones are very, very important. Very, 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 very important. And it can be 3 to 10 candlesticks. Like this one now, you can see this one is like four candles. 1 2 3 4 5 candles. This one is like 6 candles, and they are big candles, and they are big candles. So when you map out your zone like this, you are not supposed to just trade like this. No, when you map out your zone like this, you're not supposed to trade like this. No, you are, when price gets to this point, what you will do is you now look for a confluence, like an entry trigger, like a pin bar, double top, double bottom tweezer, double top tweezer. You look out for engulfing candlestick, you look out for doji, because one signal is that price is on the zone. That is number one signal. So to confirm that signal, you see that price, sorry, to confirm that signal, you now see that that's candlestick pattern. Now I'm seeing a double bottom tweezer here. Remember, this price extended to, oops, okay, now see these two candles. You see a double bottom here. You see price rejected the first time, then rejected the second time. See here. So what are we saying here now is, one, price is at the zone. This is the zone, because here it didn't give us any entry trigger, so I won't enter any trade here. I'll just wait. You won't always catch all the opportunities in the market. What I will do is to wait until I see a confirmation. You get? So once this confirmation appears, this double tweezer, I'll just enter here after it has formed. After it has formed, that is where I'll enter. And if you check, that is the point where market went up fast, like swiftly. From this point is where it went up swiftly. You see this one, when it came here, it didn't really move. It didn't move fast. But immediately this one shows up, it moved fast to the upside. So these are how to locate supply and demand zones. And supply and demand zone is the same as support and resistance. So when you see all these zones, you will also look out for candlestick entry trigger. Some people use two confluences. Some people use 3 confluences. Some people use 4 confluences. So, but for me, I use only 2 confluences. I've not even started my own chart because my chart used to have moving averages, like something like this. My chart used to have moving averages. But this is how to spot supports and resistance, how to draw the zone, how to map out the zone, how to enter it also. And also, mind you, there is this thing they call order block. Though you don't need it, but order block is what you map out. This thing is called, I don't want to call it order block because it will sound like this is an order block. The green, the opposite candle before the abrupt movement is order block. Oops, they brought my light. So the opposite candle before the abrupt movement is order block. So there's an order block here, there's an order block here, and and let me keep looking. There's an order block here, there's an order block here, and there is an order block here, and I'm still looking for other blocks. There's an order block here, and there is an order block here. There's an order block there, and let me show you 2 more order blocks. Order blocks is, you see it after every 3 abrupt movements. There's an order block here, there's an order block here, there's an order block here, and there's an order block here too. So this is how to spot support and resistance, or supply and demand. From this my chart now, I can see a downtrend. I can see a downtrend, higher high, higher low. So I can see this, then I 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 see this, then 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 this, 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 this. So it's still the same thing I was saying, that the market will go like this. The market will go like this. Remember I said when it gets to this zone, it will drop. When it gets to this zone, it will drop. When it gets to this zone, it will drop. So the same thing applies. This is a confluence. Sorry, this is sideways. So when the market gets to this point, it drops. Then gets to this point, it drops. Get to this point, it drops. Get to this point, it drops. It is still the same thing apply. As I was saying before, the same thing apply. So I believe and another thing again I want you to know is when a price is doing this thing you are seeing here, when it is not going up or it is not coming down and price is doing this, what you will do is you still take your rectangle, take your rectangle and map out this zone. Map out this zone. So you map out this zone. It's the same thing as when price is doing this. you map out this zone. That is what we did there. Then if price break here like this, it means that price will keep coming down, but we don't just enter for it to come down like that. We will wait for a retest, which is price will touch this one back and drop. And that is what happened here. Price did this, came down, touch this one back and drop. And drop. I don't know if you are getting it. Now let's see another one again. The same thing applies. If price is doing this, then you map out this zone. Once price break it to the upside, you don't enter. You don't enter. Let it do it. Let it go. If you want to go, make it go. Just wait. Just wait for it to come back and retest this zone. Then wait for your entry trigger. Once a pin bar shows when it is here, not when it is here, not when it is in the middle, when it is at this top, just on this line, when it is here, just wait for your pin bar, engulfing candlestick, doji. Once it has shown, enter for it to go up, So guys, I believe I've been able to say something meaningful today. I'll be seeing you guys in our next class. Good evening. How do I